2019 seems almost a decade away, given all the changes since last year. I think we've taken steps to make sure that the business is very resilient. We've cut our costs quite significantly on the operating side, from about $525 million to $335 million for this year. That is a very large reduction. We've also reduced our capital expenses to about $120 million, almost a 50% reduction in capital. So our business is resilient now at $25 a barrel for the remaining part of this year, and roughly $27 a barrel into next year. That means it's cash flow break-even at these much lower levels. Our operating cost has come down also significantly from the low 20s, 22 last year, to $15 a barrel this year, and $12 a barrel next year, so extremely resilient. Now, the free cash flow numbers include also capital costs, abandonment costs, taxes, interest that's paid, everything else that we have to include within our cash flows. So we are very resilient in these lower oil prices, and the reason we have restructured it the way we have is we wanted to be managing the company into a sustained low oil price environment.
Amjad, there are three curves out there, and the world is obsessed by one, of course, which is the demand side, possibly by the supply side. But I want to look at the cost side as well, because only if the costs can get down can spending be kept up at these levels. What's happening to costs in the industry at these levels as well? Because if the industry can control the costs, then, of course, things get a lot more profitable at these lower levels if we're going to stay here for longer.
I mean, I think the service industry has been through a long cycle of a downturn. I think margins are quite depressed already. I think there will be some incremental additions to some lower costs. I think we were looking at some incremental increases over the last 12 months in some sectors. I mean, the drilling rates have gone up probably 20 to 40% in terms of drilling rates. Other rates have been going up 10 to 20%, but I don't think there's really much, Steve, in terms of the service sector. That sector has been hit very hard, and I do feel that we still have overcapacity in the service sector, and we'll see a significant decline in that sector now that the capital costs have come down significantly.
So the oldest of old adages in the industry is the cure for low prices is low prices. But because demand isn't coming back at these low prices because of all the obvious reasons we've discussed for the last month or so, is that still the case, that eventually if we stay too low for too long, that we are going to see a massive spike at some stage, as we have always done historically? Is this time that adage broken?
I mean, this is the first time, I think, that we have seen a huge amount of additional supply and a very large demand destruction hitting at the same time. So I think with the Saudis and the Russians disagreeing in the last OPEC meeting, we've seen an increase in supply where demand has come down by at least 20 or 30% over the last few weeks, maybe even a larger amount because of COVID. So I think in the short term, there is no cure. I think we are going to look at low prices for a while. But as things stabilize, I do believe that the adage is still valid, and that it is low prices that will take production out and reduce the amount of supply in the market. We've seen yesterday on the EIA's probably one of the largest, actually the largest decrease I've seen in the U.S. production. Production is down 600,000 barrels a day, week on week. There are many factors associated with that, COVID included, but I do believe that shale industry is struggling for capital, but also the realizations for inland crudes like Midland and in Canada are in much lower than what we see as waterborne crude. So it's $5 a barrel for Canada, $10 to $15 a barrel for Midland inland crudes. So realizations for inland crudes have come down significantly, and those will shut down significant production.
Hi, I'm Amjad Bseisu, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.